All right, Austin, thanks for being here today. We're excited to learn more about the life settlement industry, and thanks again for your time. First question we have for you is, what makes Magna different than other companies in the life settlement space?
Yeah, fair question. I mean, I think the biggest thing based on my industry experience is that we're owned by a multi-billion-dollar, fund that really dedicates and has the money for us available when we're making offers. And what I've seen in the past is, deals that are on the table and they end up falling through because the financing follows through. So we don't, unlike some of our competitors, our spend next month is not based on the capital raise this month. We know if we go and get good paper that the money will be there to purchase it. That's the main thing. Which gives us the ability to make great offers. We average $600,000 per bid on our offers, which is I don't know for sure, but I got to think that's the highest in the industry. And a big reason for that is we're a buy and hold. We don't flip contracts, so we're not here to try and make a margin and sell it to somebody else. We buy and hold because the fund wants to hold that as their main asset. So I think that would be the main 3 points I would tell you.
For a long time, the life settlement industry had a black mark in the past. How do you see the settlement industry in the future moving ahead?
Well, number one, the regulatory framework has come a long way since 2005. 42 states now regulate transaction at the insurance commissioner level. In 2004, it was virtually zero. So that's helped a lot. And most of that obviously is for the consumer protection and keeping the people like us in the space honest. And so that'd be the main thing I'd say. The experts and insurance agents that we work with, we think there's a minimum of 10 years of inventory as far as the policies that people want to sell. And if you add that with the aging demographic, I think the growth, and it even has been over the last 36 months, is going to be exponential.
Yeah. So when you're looking at a life settlement, what makes it the right time to sell a life insurance policy in your experience?
Yeah, a lot of different factors, but it's really, when it comes down to it, we're looking at the seniors of America that really 3 things: no longer need the contract for what it was put in place for, flat out don't want it, and can't afford it. And number 2 and 3 are typically in alignment with each other. And so, what's tough is that a lot of these contracts were sold in the 80s and 90s at a certain crediting interest rate, knowing that the cost of insurance was going to go up. The interest rate would offset that. And now that we're in historically low interest rates for 10 to 15 years, that promise has gone to the wayside. And so you have a client who was told in 1991, this is going to be your premium for the life of the contract, and when you're 75, you can turn that premium payment off and you're going to be fine. And now at 79, they're getting a letter from their life insurance company saying, not only is all your cash value gone, but we need to increase your premium by 40% to keep it in place. And that really, Mike, has created our industry.
Yep. Yeah, and we've lived that. The industry has been reactive management for so long, and that's why we're excited about Performix and the Magna relationship, because we're taking this on the proactive side. We're going to be monitoring these policies each and every year, so you're going to have more time to react and hopefully get better offers through the relationship with Magna. One of the things we see is this new best interest standard. So with our system and our platform, we are being proactive. We're making sure we're monitoring the policy's performance and make sure it's the best interest. How do you see the best interest standards going to kind of correlate and relate to the life settlement industry in the future?
Yeah, I think Michael, by the day, it's going to become more and more relevant, which is why we're excited to work with your platform. And you see all these things happening in the securities world and the DOL changes and disclosure of compensation. This is in the same lines of that, less about compensation, but taking care of the client that you've had for 35 years. And if you can't keep the original promise because of the circumstances, you need to be proactive to help them with solutions.
Yep. And I guess that leads into, different state regulations based on where the policy was issued. How does that affect the life settlement industry, and how are you guys taking a stance on that?
Yeah, it's interesting. As sales guys, that can be frustrating, right? Because it is regulated at an insurance level, no different than when you're selling a policy to someone. And so different states are harder than other states. And so we need to be educated when working across the country that we are licensed in all 50 states to purchase policies. We need to know what restrictions we're dealing with our agents, with our consumers, compensation, offers. Some states are counter bid states where you need to make sure that you have at least 2 or 3 bids before they can accept an offer, which I think, again, it can be a little cumbersome, but is the right thing for the industry overall and keeps what I like to call the good guys in the game.
Yep. Agreed. One thing we see a lot is, what are the types of policies that are ideal for life settlements? People think, they can't do it with a term policy, or maybe it's only for index. What's the product mix, and what can be sold in the life settlement market?
Yeah, so the majority, meaning 95+% are some sort of UL chassis, like I call it. So it's all things UL. To your point, indexed. Now, guaranteed is a product we see a lot of. No lapse guarantee is a product we see a lot of. We have great estate planning attorneys that send us second to die policies that were put in place for estate planning, but now the exemptions are so high they're no longer needed. But those are all UL as well, universal life. Variable is a tougher market because of the licensing, but that's also an eligible candidate. And then to your point, pending health and age, a convertible term to all of those chassis are absolutely an opportunity. In fact, as you know, working with the agents, that's really a place where they can help the client get something for nothing when that term's going to expire worthless in 18 months, and they can get paid on that conversion. And that is a big part of what we're building at Magna, is helping agents that don't even necessarily want to be paid for the settlement because they can get paid in the conversion, and then the client wins both ways.
When you're looking at life settlements, what's the typical age that you could start looking at settlements, and how do life expectancies affect the valuation for the potential sale of policies?
Yeah, great question. So those are they work in combination. So typically age 65 is the lowest that Magna and most buyers will look at. But to the second part of your question, the life expectancy is actually more important than the age. If you have a 68-year-old that's impaired, that policy may be more valuable than a healthy 80-year-old. And so it's absolutely about the time value of money and present value versus how many more premiums am I going to pay. And so typically 100,000, age 65 plus, but to your point, the life expectancy is the most important piece of the formula.
One of the things that we hear a lot from agents is, to do a life settlements, it takes a lot of time. It's complex. What is the timeline and what is the process, once you get an opportunity for a life settlement?
Yeah, and those answers and those thoughts are coming from facts of the past. What I've loved since I've joined Magna is the investment in technology and people. And so the process is really, and our agents hate to hear this, but it is the fact. The process is going to depend on how clean your file is, and how much of the upfront information that we've asked you for do we get day 1 versus day 90. Typically, what I would tell you is if a file is clean, we have our processes, we have our medical record gatherers, and we can go start to finish from 45 to 60 days from submission to offer. Then there's the contracting part, which takes a little time because you work with the carrier, but it isn't as cumbersome as agents remember. And that's a big part of what we're out to spread the word on, is if you try this in 2006 and you like the idea, but it was too cumbersome and too much work when it's not your main 8 to 5, let's retry the business, because it's come a long ways.
Yep. And also with technology, with our relationship with you guys and our platform on the front end, our system will request the alternate illustration that you guys need to start the process, so we could save the agent some time there as well. So again, technology will play a big play in this moving forward.
Absolutely. I would add to that, Mike, not to cut you off, but the agents and you know who they are that we've introduced you to are ecstatic about your setup solely because of the efficiency of gathering the information needed to price. So yeah. Absolutely.
For sure. And the big one here, how are agents compensated on life settlements? What is it, a moving target? How does it work, and how do you guys do it with your clients?
Yeah, we have a couple options. So the traditional way is no different than a realtor. And so getting the maximum price possible for that policy, which again, we've deployed more capital in the last 5 years than anybody, if you look at a cumulative, because we're making proper offers. So that's why agents like working with us. So a percentage of that gross off, like we call it. Again, you can sell your house on your own, but your realtor is going to get more money, and people need to get paid to do their work. Secondly, I do have some folks that have restrictions, whether it's their fiduciary responsibility or maybe they're an attorney, and they can't get paid a commission. We do have a lead referral agreement that we've got approved at all the states. So I can simply give you a percentage of the face amount just for a lead referral. And then third, I was a Northwestern Mutual agent for 12 years. I think we underestimate the amount of money that agents can make with our term conversions, which is why, again, working with Performex to identify, you have 3,000 term policies, these 60 qualify for term conversions and settlements. We're underestimating the amount of revenue you can generate for your agency and your business to do that.
Yeah, for sure. And the last big one, I know there's a little confusion here. When an offer is made and it's accepted, how is it taxed? Is it flat across the board? What do you see, and how is a sale of a policy taxed?
Yeah, so this is getting a little into the weeds, but I do want to say that if there's a cash value, there could be an ordinary income tax situation there. It's pretty rare, because when we're finding policies, it's because they're out of cash and they're getting a premium call. So traditionally, it's a long-term capital gain and it's above the basis. So we had a massive win at a legislative level last December of 18, where when tax reform came in, they gave the ability to, or December 17, gave the ability to just tax on the basis, which is how you're taxed if you surrender a policy. Prior to that, there was a cost of insurance deal, and it just screwed things up, Michael. So the easy answer is, if you put $150,000 into your policy and Magna gives you $200,000 to that policy, you're going to have $50,000 long-term capital gain.
Gotcha. Well, Austin, this has been great. Thanks for your insight, and we look forward to a long-lasting relationship with Magna and providing the agents a solution for proactive management and uncovering issues sooner than later, so we can police these policies and protect their clients together. So.
Thank you, Michael. Our guys and gals that we've introduced Performex to are super excited about it. So
great. Thank you.
All right. Thank you.